Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen here, and we are here with our year-end special. Of course, because tomorrow, Wednesday, is New Year's Eve, we decided to do it a day early, and who better to help us out with that than David Saito-Chung, our Deputy Markets Editor, and he's going to help us wrap up the year. And I couldn't think of a better guest. We have known each other for, 20 years now that we've been working together. And David, of course, is one of the co-managers of the Leaderboard model portfolio, and he writes just some excellent stuff, and, of course, hosts on the IBD Live show. Just a jack of all trades, David.
Justin, what intro, what great music for the start of the show, too. It's been a while since I've been on the podcast, so I'm thrilled to be here. And, they often say you save the best for last, right? But
Yes.
maybe in this case, is it you save whoever's going to be working the last week of 2025 for last? Is that really what's happening here?
Yeah. We go with what we can get. So,
but hope we don't disappoint the audience today.
Well, one of the things I love about when you're on, David, is that you are such a historical aficionado. You really do like your charts. You love, kind of delving into the history, and coming up with analogs like, oh, you know what? Here are things that are kind of like things in the past, and it's good because we do see this repetition a lot of times. There's a lot that's not new here, where we've kind of seen something similar before. And Bill O'Neill, of course, the founder of Investors Business Daily, was great at this. You worked with him very closely, as you were in the markets department, and sometimes you'd have to consult with him on Investor Corner articles and so on.
For sure.
And it would be one of those things where he'd be like, yeah, this is kind of like, Universal Match back in 1950, whatever, and you're like, Universal Match, what is that? So
I would have to ask you after having a talk with Bill, because right back at you. I've always admired too, Justin, how you've kept a lot of the past precedents in mind when you share those on shows like IBD Live and on the podcast. So it is definitely an exciting time to talk about those market precedents for a very exciting 2025.
Yeah. So, let's get right into it. I'm going to share our market surge charts, and we'll get right into basically kind of what happened this year. Certainly, one of the things that's kind of happening lately is just some kind of flat action. It's not really going down, not really going up. It's just kind of hanging out. But it seems like so long ago, but we had this little mini crash almost,
right,
with the tariff tantrum back in February, March, and April. And even the start of the year, we got to remember, I'm going to just zoom out slightly here to remind folks that the way the year started was really choppy after this Fed meeting that we had that kind of, really shook the confidence of folks in terms of what the rate cut cycle was going to look like. And for those that haven't seen it, David, you've done a great job at the comparisons of the 94-95 rate hike cycle compared to what we had in 22. So that was one of the podcasts that you did with us. But maybe kind of paint the picture of how this tariff tantrum that we had really affected so many stocks in terms of the bases, the way they looked, and their depth.
Yeah, that's a real key topic and a lesson for all of us in 2025. Notice on this daily chart, everyone, how Justin highlighted, yes, that choppy, flat action generally in the first 2 to 3 months since December, right? And We had some good news in January regarding jobs. There was acquisitions being made, and then the floor underneath stocks really fell on the announcement of tariffs with our major trading partners in North America, and that caused that big drop. I find it interesting, Justin, too, that with the benefit of hindsight, we can see that 20,000 on the Nasdaq was a very interesting multiple time resistance level,
Hmm.
and then we finally had that 27% fast bear market. Kind of reminds me of 1998 too. That was a rapid bear market where we didn't quite
Yeah.
fall 30%, but there were clearly it was news driven. There was fears about the economy, and we had a major correction that allowed some of the best performers in the growth stocks realm to form bases, many of them being deep. One example that I wanted to share was a stock that I currently own. Full disclosure, it's Palantir PLTR. From that February 2025 peak, it fell 47%, and yet was able to become a winner in 2025. And it wasn't just the fundamentals. Obviously, you need the support of individual investors as well as institutional investors, even though the data doesn't show a lot of sponsorship on the institutional side. You can see that the price action, the volume really supported this stock's big move. There were other companies too that corrected in that 30-40% level. Hood, that was a 56% decline from February to May. I kind of take Hood and Palantir as well as Eli Lilly, LLY, and KRMN, Carmen, as good examples. Something that I kind of learned and relearned this year, that some of the best companies don't necessarily have to come out of shallow, tightly wound bases. Some of them do come from very, very deep declines, influenced in large part by the market. But if they have everything that we've seen in past bull markets and past big winners, we shouldn't shy away from them.
Hmm. And I think here again, the important thing is making sure you're putting it in the context of the market. When you have,
Yes,
as you mentioned, with 1998, you had a big news event. Long-term capital management, was in some serious trouble. It just goes to show you that hey, you can have a Nobel prize under your belt, but that doesn't necessarily mean you aren't going to blow up your account if you don't manage your risk properly. Um,
exactly.
you had all the
And the
currency
best
issues.
trader on Wall Street, right? John Meriwether of Salomon Brothers. They had this
Yeah.
all-star cast at long-term capital, but then you had so many other things going on. The Asian crisis. You
Yes.
had the Russian
Russian.
ruble
Yeah.
devaluation. There was a lot going on there. So
Hmm.
kind of similar, just like what Mark Twain said. History doesn't exactly repeat itself, but it does rhyme, and we saw rhymes in terms of worries and concerns about the economy, the global economy, because of the U.S. and all of the
Hmm.
tariff news in February to April. So that was one reason why I wanted to bring up 1998, even though that was really not planned, Justin. Sorry to take you to that
No, no,
to
no.
that
It's
part.
well, but it's interesting because again, like one of the things that is crazy about looking at Palantir,
Hmm.
it's stunning when you come up with that number, David. It's almost like I have to fact check you. 47%, like, it lost
Yes.
half its value. It doesn't look like it, but
No. No.
sure enough, you roll over and Market Search has done the math. Now granted, it had such a move, from 6 back in 2023
Yes.
to 200 this year. So, but yeah, this was from 120 all the way down to 60s almost. So, 47% move. So now, certainly, if you had held it from 6, maybe that's something you can survive. But what's your typical approach? I personally my stomach just can't handle that kind of drawdown, especially if I've got a good gain. Certainly if I don't have a good gain, there's no way I'm sitting with something that deep. But you've held some things through some pretty serious corrections. How on earth do you do it?
I got to tell you, I'm really not a pro an expert on this, but I will say a few things. One is, so glad you're showing the big uptrend that preceded that 47% decline. If someone had bought the breakouts from those previous set of three bases there, I would argue that you had enough of a profit cushion to be willing, as that 47% decline happens in real time, to ask yourself, what would I do if the stock approached the 40-week moving average? And that's exactly what happened with Palantir. And if that happened, even if it clipped it for a little bit, for a couple days or a day, or for the week, if it closed below the 40-week line, what would my paper profit be? And at that point, decide, do I want to just lock that in and wait for another big possible run, or do I want to stick with it because I really believe in the company? I believe this is the leader. I believe the industry is strong. The fundamentals are going to continue to grow the company, and it's really posing all those questions together. On a mathematical standpoint, too, it is funny, Justin, that I've seen stocks that will triple, but before they triple, they fall 40, 50%. And that
Hmm.
at that very low point, you see a gain of 100%, 150%, all of a sudden fall down to 50, 60%. What do? You have to do certainly anticipate that possibility. And when that happens, for me, it's really about whether I've got possibly one of the best stocks fundamentally. And that
Hmm.
helps me try to at least survive a big weekly decline. So we saw two big weekly declines at the near the bottom of that base, right, Justin? And then just as it looked like it was going to be a magnet toward the 40-week line, we have this big reversal that helped the stock bottom out in heavy volume. That was in April, right around the time of the most important day in my view of 2025, the April 22nd fall
Right.
through.
Hmm. And I'm just going to go ahead and mark that real quick. Right here
Right
is
there,
where
yeah.
the follow through day was, and the very next day, Palantir is kind of breaking out above resistance and gets itself back above 100. So, yeah, very interesting. Now, I'll full disclosure here. I've tried Palantir a number of times. I didn't get it then. I tried it a number of times in here, and this is actually, for as much as this stock has gone up this year, it's actually been one of my worst performers because,
Well, you've had a lot of
lately,
great stocks too, Justin. So I
yeah, yeah,
mean,
but this was my kryptonite. This was my kryptonite. The most recent failed bases, and there were a couple times where I tried it, and my losses were small, but I tried it enough times to where it was like, oh, this one, this one stung a little bit. So, another one that you had from your notes as we were discussing stuff, App Lovin,
hmm
which was another one that had a pretty stunning decline
it
from
did.
February to April. So, do you want to talk about this one a little bit as well?
Oh, absolutely. This is one that I totally missed, and I know we reported on it. I know a lot of screens had it. I can't remember if Swing Trader played this one multiple times or not. I think a lot of people listening on the show might have traded this, and I hope it contributed to a solid year for you. And just like you said, Justin, from 525.15 to 200, this 62% drop is truly off the charts. You would almost never expect a stock like that to come back, but it did. And when it did, look how those numbers on the fundamentals were. Triple-digit earnings growth in Q4 of 2024, in Q1, 149% growth. There was a reason why the stock came back, and I think another key lesson here for 2025 is that this was the kind of year where you could have bought breakouts in bases that were inside bases. I think App was a good example of that.
Hmm.
When you look at this with the help of pattern rec, there was that beautiful cup without a handle at 429 in August, and we definitely looked at it closely for leaderboard, and I think IBD Live, our daily show on investing, highlighted this move as well. when it broke out like that, you can still see that at around 430, 435, when that was still 90 points below the left side high of this large pattern. That's not what I learned as you know starting out at IBD as a markets writer, what to be looking for. You're normally looking for breakouts to 52 week highs or all-time highs, but this was definitely a special stock, and I feel like this could be a good one to print out and study for future use.
Hmm. No, absolutely. Certainly went down in the books, and we did play this a number of times on Swing Trader.
Hmm.
You know, uh, one of our better gains was back at the start of the year. Um, back here in January, where we had a like a 3 or 4% gain,
Hmm.
another 3 or 4% gain. Here in February, before bad stuff happened, and then we played it a couple times in August as well. I'd also like to talk about where okay, you have this very deep correction, and as you're coming out of it, you do get another cup, and it's much tighter. 25%
Exactly.
here. Same thing
Right.
as same thing as Palantir. Even though these didn't work necessarily, you did get tighter bases. Is that something that you look for? Because personally, a lot of times deep bases scare me unless I see that there's some type of equilibrium between the buyers and the sellers, and not
Yes.
as much of that, you know, uh, floor dropping out from underneath you.
Yeah, I think you're right. In that sense, it's harder to see that on Palantir on the daily chart because there's so many smaller bases. If you go to a monthly
Hmm.
chart or a weekly chart, then you see right that uh, all of these little bases that happened in 23, 24 were part of a real recovery in the stock after a very rocket-like IPO 5 years ago. And then let's go back to APP. I totally agree that I think that base within the larger base was uh, very impressive to me. Right. Yeah, exactly. There's the big cup with handle, but then you have that little cup. So I think some people like David Ryan, our special guest on Tuesdays on IB Live, had highlighted that as like a cup within a cup, a fractal, if you will, in mathematics. And
Hmm.
uh, notice too how there was symmetry. It was a well-rounded base. It took its time to form. Usually, one of the textbook rules for cup bases is 6 weeks minimum, 7 weeks for a cup with handle. It met those criteria within the context of what was a very interesting start for 2025. Also, want to highlight too, if we go to the let's just stay on the weekly here. Notice the earnings line was exceptional. That earnings line did not get wrecked by the threat of tariffs, right? As
Hmm.
we can understand, they weren't selling toys to America, or we weren't selling. This company wasn't selling soybeans to China. This was totally all about the digital economy, and so it kind of makes sense how the company's fundamentals stayed really intact. And then that weekly chart, as a good lesson for everyone, including myself too, is understand that 4, 5, 6 year history of the fundamentals shows how this became really like I would argue almost like a Cisco or a Microsoft of today in terms of those earnings. Four or
Hmm.
five years
Yeah.
ago, yeah, net loss of 35 cents, and then profitable in 2021. Uh, a big drop in 2022 during the Powell inflation, the monetary tightening bear market, and then just off to the races in terms of earnings. So, in that sense, this App 11 is a repeat of history. You want to find those companies that have just the most awesome profitability.
Hmm. Well, speaking of history, let's take a little walk down memory lane, and some of this might actually be beyond your and eyes living memory. We have to
That's
go
right.
back to our history books, for some of these. But that's okay. That's what we like to do. It's a
Exactly.
fun exercise. So I'm gonna pull up. Let's see. Let's start with Chrysler. This is one of Bill O'Neill, the founder of Investors Business Daily, one of his favorite charts because this was a big winner for him. And of course, this was a deeper base, but there was news, right? There was a
Yes.
reason that there was a little bit of let's say panic in the markets at the time.
Totally. So you've got, I would assume, the chart from the most recent publication of the story, because I have one
Yes,
here. Yeah, I have one
the
here going
original.
back to the original. Yeah, this is
Uh-huh.
January 2nd, 2013. This is the original copy. Notice how it's very gray and, you
Yeah.
know, an old
A
looking.
little yellowed.
Yellow, yellowed, exactly.
Uh-huh.
Yes, but I have to say this is one of my favorite columns of the time. This is 12 years old, right? And the detail, the narrative that Bill spun with your assistance in the story is really unforgettable. How that how that base form, for instance, on the right side, you see all those arrows pointing to high closes and up weeks. We're looking at the up week, a weekly chart, everybody, and you can see all of
Hmm.
those weeks, or many of them, showed accelerating turnover or above average weekly volume. That line on the volume charts, very, very valuable. That's your 10-week moving average for volume. So whenever you see that wall of blue, like what we talked about on the right side of the base, as well as 4 up weeks in a row, 5 up weeks in a row, 6 up weeks in a row. This is something that Bill really ingrained in our brains as we try to look for the current winners of the time. And then, as highlighted in the story, this is from the January 2023 edition. A U.S. spy plane taking pictures of Soviet missile bases under construction in Cuba. So we had the Cuban Missile Crisis, and Soviet ships loaded with missiles were to meet a U.S. Navy blockade, and that terrifying moment in world history happened at the same time that Chrysler fell sharply within that handle, but created a nice handle in which that the most important thing about handles is, one, they form close to the high of the base that you build. Two, that is a final shakeout where those shares are being sold to sturdier hands, if you will. And if those sturdier hands hold on, that creates an artificial uh, shrinkage in the supply of shares available for those who really want to buy and scoop those shares. So as soon as we had the follow through, as you can see on the upper part of that chart, 10/29/62, uh, Chrysler was like that proverbial beach ball that was submerged underwater in the pool and let go and just rocketed to new highs. And this is typically what you see when you want to find the leader after a significant correction or market. You have to really be on your toes to find those stocks that are just ready to burst out of a very good base. So another thing too is 36-week cup with handle. You had to be patient. You had to wait for this pattern to develop too. This was nearly a 38% decline from high to low. So normally, a lot of bases don't really turn out to be that great after the stock, gets back into those highs. But because this stock, this company, had a great management team, they had great products on the civilian side of the cars, but also they were contributing to the building of aerospace and military planes in the early stages of the Cold War. This was such a timely company, and that chart really speaks volumes about that.
Hmm. And to your point, yes, the Cuban Missile Crisis. For those that need a little refresher in their history, the 13 days of that crisis was in October of 1962, from October 16th to October 28th. So the follow-through day on October 29th was as soon as that, as soon as the sigh of relief was breathed worldwide.
Yeah.
That's when the follow-through day happened and coincided with the breakout here for Chrysler. And just so folks know where we're pulling this from. David mentioned that we had a series 12, 13 years ago in the Investors Business Daily. We published it every Wednesday. This was written by Bill O'Neill, and we decided to redo them. We kept all of Bill's notes and everything that he had originally wrote, but we thought it was a good idea to resurface these, and so we've been doing that this year, where we've been republishing these in the paper. So I'll include the links, the URLs to some of these charts that
Great.
we're talking about. I'll tweet those out so folks can look these up. But they're absolutely very interesting to look at in the historical context of these charts.
Hey,
Um,
Justin, let's
yeah,
also point out the fact that you can see just above the volume bars in 63 and 64, there were two-for-one splits, which
yeah,
that means is that the breakout at that time, right after that 12, 13-day Cuban Missile Crisis that you really eloquently highlighted there, and the follow-through on October 29th, the actual breakout point in the story was 58.50. So
hmm
another lesson: don't necessarily try to find the cheapest stocks in the market. Some of these stocks have incredible moves when they're trading 40, 60 a share or even higher.
yeah. My recollection is that Bill was buying it at 57 and 5/8. That's
Yeah,
just
yeah.
a number that sticks in my head because I heard the
Well,
story so many times. You know? And he learned later that the Love brothers and Jerry Sy, some very famous investors were
and
buying it.
Gerald
I
Loeb,
think maybe even Gerald Loeb, yeah,
Gerald Loeb,
Gerald Loeb, the
yeah,
author of the
hmm
Battle for Investment Survival. He
yeah.
found out that they were. I think the Love brothers were maybe accumulating down here on the bottom of the base, but yeah, Jerry Sy and Gerald Loeb were right there with them, buying at 57 and 5/8. I think they split that tick among themselves. Let's also take a look at Texas Instruments. This is another one. I should mention that Chrysler. That
hmm
one was featured in the paper more recently, back on July 24th. But here's Texas Instruments that was a little bit more. Let's see, we did this one August 29th, and this is back in 1958. So again, we weren't alive back then, you and I, but it's still again very useful to look at this history. Why
Well,
did you choose this one?
exactly. Well, I got to thank you also for helping choose this one. When I was a kid, when I went to service merchandise, one of my most enjoyable purchases was one of those electronic dictionaries that was actually produced by Texas Instruments.
Mm,
Just a little side note there. Of course, this was in the 70s, but I find this one another great example of how some of these companies can go through very deep corrections, and you shouldn't leave them for dead, because if they have what we normally look for in terms of the best merchandise on Wall Street, Texas Instruments is a really great example. You can see on that chart in 1957 started building that 36-week cup with handle, and that was more than a 42% correction. I don't have exact numbers from the high to low, but I kind of guesstimated it would be between 42, 43, 44. So when you have that kind of depth of a base, it's extremely unusual, because a lot of the great cup with handles and flat bases showed a much smaller decline. But just like Chrysler showed incredible volume on the upside at the bottom of the base, a beautiful handle where the action was tighter. You want to make sure that the handle overall shows a smaller, lighter decline than the overall base, because that's visually what you would expect when you're looking for the silhouette of a cup with handle, as seen on the chart there. Really interesting too that like AppLovin, like Palantir, like Chrysler, Texas, when it broke out, it was still relatively a new company, having been founded in 1951. So this first breakout that that launched this near 8-9-fold move over the next 2 years was coming in just about 7 years into the birth of the company itself, let alone going public. So always really heading into 2025, 6 and beyond, keep an eye out for new issues. And sometimes it can take years before they really move out. I think App and Palantir are good examples of that. Sometimes they rush out of the gate like Home Depot did, but and Cisco to some degree. But it all varies with the stock and the times. But here's another great example of two of, well, if you bought it right and you use that weekly chart, you notice that it took more than 6 months before it actually closed below the 10-week moving average for the very first time as a smaller base. I would assume that was a flat base that formed in the second half of 58 that set up a new breakout.
Mhm. And again, one of the important things here, just to remind folks, we do have for both Chrysler and Texas Instruments here, we have the the kind of area here where you're seeing the market action, where we have, again, there's context. The context matters here in terms of what's kind of creating these deep bases.
Exactly. Sorry, a little
Yep.
water went down the wrong hatch. Apologize.
I
And
was
then
trying to
this is
stretch it
live.
for you. I was trying to stretch it for you.
Yeah, sorry about that. But yeah,
Yeah, no.
it's really like I said, one to study closely,
Yeah.
and notice too that once the market headed in the right direction with the follow throughs that you see
Yeah.
at the upper part of the base, uh, the leadership by the stock was really well reflected in the chart.
Yeah. I'm also going to go ahead and show one more, and we're going to do a double whammy here. But because you mentioned 1998, I thought it would be interesting to show America Online, and we'll also show Charles Schwab. Charles Schwab, we haven't republished that one yet, but we will very shortly. I just kind of created some charts and markups for our art zone, so that's coming. But as beautiful as this cup with handle was here in 97, the area that David and I were talking about is here in 1998. And I first started working for Bill in 99, September of 99. And I was marking up a lot of charts because this was a 400% move in 6 months that he got out of AOL. And the thing that stunned me was this handle. Like, he kept on calling it a cup with handle. And I'm like, I've never seen a cup with handle where the handle looks so ugly. And
Right.
and this is exactly what we showed earlier with 1998, that double bottom kind of action in the Nasdaq Composite, long-term capital management, Asian currency, Russian ruble, all those things. And what was interesting was this handle formed, and it didn't undercut, whereas the market did. Right, the market did have that
Right.
undercut, and that was one of the key elements of relative strength that made Bill think both Charles Schwab and America Online were worth purchases, and that they were acting stronger. So yeah, even though this handle part was a little ugly, he said, well, in the context of the market, maybe not so bad.
So what a masterstroke of analysis by Bill, and teaching both of us and many others about always looking at the stock action through the lens of the market. And when I look at this more, you know how it's interesting that the left side of that cup featured a number of support weeks. This is one thing that I'll never forget hearing from Bill, who unfortunately passed 2 years ago at the ripe old age of 90. And when he was in the newsroom looking at charts with us, with me and you and Chris Gessel, Ed Carson, Ken Shreve, and so on, he would say, look for those bases where, okay, you do have 3 or 6 down weeks on the left side, but look where it closes. If it closes in the upper half, or in the
Hmm.
upper so-called upper 60%, if you will, of the weekly range, that showed that there were investors out there who were very reluctant to let this stock fall a lot. And so at the very bottom of this base in 98, notice that it really gouged holders, went down below 18 for a little while, but then closed up near 22. That turned out to be the bottom of the cup, and then similar action happened in the handle. In fact, those two down weeks within the handle, you see that the closing hash mark for the week were nowhere near the lows of those weekly ranges. They were actually relatively high up, and that's so-called stealth accumulation that you want to look for in future bases.
Yeah, no, very, very important. And I'm going to go ahead and flip over. One of the things, of course, that we both enjoy about our market search charts is that we have the ability to go back in time,
Yeah.
for stocks that still exist. We don't unfortunately have the dead stocks. But here is again this time period that you referenced in 1998, when all of those crises were happening. The economics, were economic uncertainty, and here again is that undercut of the the 1,477 low was undercut here in October, and I'm just going to pull up Charles Schwab because this also had one of those funny looking handles. And you know what? I'm actually going to have to go back in time here
Right.
because you
It's so
just
scrunched.
when you have an arithmetic chart, it's and you have that kind of move, it just doesn't look the same. So this is what it looked like at the time. And in fact, I'm going to go ahead and go back a little bit more. So we can see that cup and
Just a
handle
wee
in,
bit,
in the
right?
breakout.
Yeah. Yeah.
Yeah. But yeah, here's the statistics from Market Search. The depth was 40%, and the handle was 27%. So, quite the handle. But again, the important part here was that it didn't undercut. Both AOL and Schwab didn't undercut, whereas the market did, as we showed before. And I'll just show that one more time. There's that undercut. Whereas Schwab and AOL both held strong. So yeah, the context matters.
Even on the daily chart here again, we see support on that very last down day within the
Yeah.
handle, Justin. You see it was a very high close, and what was it,
94%.
94%?
Can't get much better
Right.
than that.
No, no,
Yeah.
exactly. And I think it's also interesting that the breakout through 1016 of 98, which probably was a day or two after the follow through in mid-October 1988, was not only clearing, yeah, let's see, was the follow through one,
I
two,
believe
three,
it
four,
was
five,
on the 14th.
14th.
Yeah, so
Okay.
this day here, we were up 2% on the NASDAQ composite. It was, after this sharp drop, a strong rally day, and then here was our follow through day. And then, of course, a subsequent follow through day on the 15th, and then on the 16th. So on the 14th, I'll just go back a couple days here on Schwab. One of the things that was notable about Schwab was that was right when it was breaking out on that follow through day. So one of
Exactly.
the first
Just
movers. Yeah.
a little repetition or rhyming of Chrysler's history with that,
Yeah.
yeah, late October 62 breakout and follow
Hmm.
through. And I just want to say, it's interesting that the stock then not only cleared that cup with handle, but then it cleared a nearly year-long resistance in F 43, 44, and turned out to be one of Bill's great stocks in the late 90s. Is that right, Justin?
Oh, absolutely. Yeah. Again,
Hmm.
400% for both AOL and Schwab, over 400%. I think it was like closer to 460 for those in 6 months. And it's one thing to have a gainer of that magnitude, which is phenomenal, but he also had size in there, and so it
Yes.
made it made a big difference. And he wasn't done. As much as he thought that the market was due for a serious correction, especially as the market kind of started correcting in the 99, the summer of 99. He got very bearish, but we got a follow through day in October of 99, and he was right back at it. And of course, the latter part of 99 through March of 2000, the top in 2000 was one of the most profitable time periods with the likes of Qualcomm, for a good
Right.
portion of that having a 100% move in just a few weeks at the end of its run. It was an incredible time, really. I just wish I had started a little bit earlier to take advantage of this a little bit more with more money. But c'est la vie. Before we finish here, David, I wanted to come back to the present
Hmm.
time. We've had our walk down memory lane and talk a little bit about sector rotation because, um, well, I guess there's two parts. You talked about the deep bases, and that's kind of been our focus here. And it does seem like we had some of these members, I mean, that are in the throes of very deep corrections right now. Even though the market is at, or spitting distance to new highs, you still have some companies that have seen, very sharp corrections. Some of the best winners. Oracle,
Right.
was doing very well, and this is, down more than 50%, or at least it was a few weeks ago. Oklo, and it does seem like there's a little bit of this rotation going on where some of these high flyers are getting hit very hard. Oklo is still down 63% off its highs. Um, some of the quantum computing and so on. Um, can you talk a little bit about the sector rotation and maybe your expectations for some of these high flyers that are, I guess, deep sinkers now?
Yeah, yeah, absolutely. Well, let's just stay on Aklo first because, as you mentioned, 63% off the high, and only recently did it finally undercut the 40-week line. That is amazing. This is such a unique stock, one to look at very closely for a long time, because Aklo was to me a good example of one of the points I wanted to make for this podcast, which was make sure you stay nimble in your thinking and be ready to take profits when necessary. If you go to the daily chart, you first can see the last move on a breakout past 85.35, and this was a base that was really narrow there. Occurred in the summer, August to September, and it just had this incredible 141% gain, 5 to 6 weeks from 85.35 to 193.84, and yet look how quickly it gave back a big amount of that gain. So with your daily chart there, I would guess that the pink fuchsia line was your 10-day moving average. For a stock that moves that quickly, the 10-day might even serve as your 50-day moving average, because look at that big collapse that happened in October following the big reversal on that new high. I I didn't trade this one because I really wasn't uh, too enamored by the fact that this was just all about just speculation into which company might provide energy years from now to data centers, but admire how the stock was a great trading stock. Just keep in mind that these stocks can go quickly down as quickly as they go up, and this is to me one of the best examples. Notice too, when it finally cracked that 50-day in October, it gave up more than half of that beautiful gain. So I think this is a good one to print out and look at really
Mhm.
closely. In terms of rotation, maybe at the beginning of the year, a lot of people expected rotation from the Mag 7 or the Mega Cap 8 into a whole bunch of different sectors, and in some ways, yes, that happened in terms of geographies. Latin American,
Mhm.
European, Asian stock market indexes did really well. Many of them hit all-time highs, and so if you made gains through those relevant ETFs, congratulations. That was a great trade for the year. I think that the greatest example of rotation for 2025, however, in my opinion, was really the precious metals trade. All the gold miner stocks did so well, and when I looked at today, the most recent IBD weekly, this is has the date December 29th. I counted the number of gold and silver stocks in the IBD 50. There were 16,
Yes.
over a third, And so,
Yeah.
in terms of extreme rotation and whether that will continue in 2026, history shows that a sector like that usually doesn't uh, have 2 or 3 big years in a row like that. Take a look at SLV, Justin, if you don't mind, and you
Hmm.
can see just like the silver's futures chart, like on Thinkorswim, you can really see climactic parabolic action in the price of silver. And so, to me, this this echoes what happened in late 70s, early 80s. Uh, there was also Dow Jones data highlighting that on the COMEX, gold just completed its largest percentage gain on a 1 year basis since 1979 and its
Mm.
largest 1 year net gain on record. We hit 4,584 an ounce in gold. Things are just so white hot. Wall Street Journal's publishing stories about individual investors just getting into silver, just buying up little trinkets and little pieces of silver here and there, thinking that, and even quoting some people saying, "I'm never going to sell." Well,
Mm.
these are signs that maybe that trade might not last too long, but that's just opinion. We'll have to see and confirm that with the charts. Also, before I mention like where I think rotation might continue in 2026, could you also look at Barrick Mining, the monthly chart, ticker symbol B?
Hmm.
I think this chart really shows how the move really started in the middle of the year, and like we had this run up in early in 2018 to 2020, and then a long consolidation phase. And if you draw a trend line from the 2020 tops across the monthly highs, you really uh, you really see, okay, yeah, something like that. I think that's where you see the rotation. And obviously, we're looking at this in our Monday morning quarterback chairs, but
Right.
you
Yes.
know, uh, the point here being is that, well, let's look for uh, another big break of a long-term downtrend in other sectors. And will that happen in healthcare? Will that happen in industrial, or has it already happened? And are we already in the midst of a move? That's kind of our challenge and our task for 2026. So I think using a monthly chart can be very useful in that regard in spotting that rotation and not relying on what some strategist or what some analyst said they think will happen in 26. Look for actually that rotation to happen on the chart.
Hmm. Well, to kind of wrap things up, David, you kind of teased a little bit of some of the areas that you're looking at right now to possibly see rotation, for next year. What's kind of on your radar?
Well, right now, when I was looking at the IBD research tables, I noticed that there were 5 sectors that had a price weighted gain of more than 40% or more. They included computer chips, electronics, mining, metals, telecom, and aerospace. So was that? Oh, it's actually 7. Excuse me. So there are 7. Let me repeat those: mining, the best sector within
Hmm.
IBD's 33 sectors. So hey, we have more sectors than S&P. We have 33. Uh, 118% year-to-date gain, price weighted.
Yeah.
Electronics was second. Electronics, so that would include the likes of Sienna and Celestica, these contract manufacturing companies, up 59%. Computer 46%. Chips 52%. Metals 47. Telecom 43. Aerospace 47. It's very possible, in my view, that some of these will continue to do well in the next couple of years because we are experiencing another major shift in technology, and that is toward AI, and the need for an incredible amount of new equipment and technology as well as the power to make this happen. I don't know of anyone who is not, like for instance, using the enhanced AI in search now for their investing, for instance. I think it's really something that's for real, and it's going to change industrial manufacturing, going to change healthcare, going to change so many areas, right? And so let's not ignore those. But
Hmm.
in terms of other sectors, well, I would say healthcare is going to be interesting. Like among the stocks that are forming deeper bases but seem to be acting quite well include Eli Lilly, uh, uh, Harrow, which is HROW, and there are some other smaller biotechs that appear in the IBD 50. Some of them have good sales, some of them have profits. Yeah, there's Harrow, there's Lilly there. That was a 36% decline within that very long consolidation. Harrow had the same exact correction size, 36%. Also, I
Hmm.
think search is going to be interesting. I do own shares in Reddit RDDT. That had a 39% decline from high to low in its current base. And that's actually, believe it or not, a lot better than the even deeper base
Yeah.
that formed before that. you know, so
That's the tighter base, right?
yeah, the relatively tighter
Yeah.
base, yeah.
Yeah.
And I want to emphasize too that, I'm not saying, hey, just go for the deep bases. No, you definitely want to look for those bases that show a minimal decline,
Hmm.
real relative strength in a group and a sector that shows relative strength. And so, for sure, I think for those who really work hard to to look for great stocks through the charts and through ratings and through stories and through whatever sources they use, they're going to find some great opportunities that come from these stocks that form really tight patterns. But here again, the biggest reason I wanted to talk to you, Justin, today was to talk about some of these big winners that came out of very deep bases
Yeah.
amid a very interesting market environment. And if we have interest rates going lower, if we have stable interest, long-term bond prices, if we have the continued tailwind of decent, strong earnings growth. Ed Yardeni believes that we are still in the middle of a new roaring 20s in terms of productivity gains might help offset inflation and might help companies be able to expand business and grow the labor market, also grow their profits, increase share buybacks and so forth. We could be in for some more good years in this decade. I think there is good reason to be looking for those powerful companies that do happen to have these deeper than usual corrections. I'm not really sure what whether like oil and gas is going to come back strong because the economy is going more and more electric, right? And there have been great articles about how peak oil is a real possibility, and people at J.P. Morgan, Saudi Arabia, they're clearly showing that they're investing elsewhere beyond just traditional oil and gas. And we know that oil and gas has had just an incredible run in America and around the world for many, many, many decades. But uh, also, I would say in terms of rotation, look for uh, signs that the IPO market also
Yeah.
strengthen. I think there are some interesting names out there, but it's still not
And some big names potentially to come, right?
right.
With
Yeah,
SpaceX and OpenAI, talks about that next year. So, mhm.
exactly. And then we've seen some deep bases being produced among some of those space stocks. Um, and let me think. I think the IBD 50 will also help really help steer you in the right direction in terms of sectors. My final point would be, if we have a moment, is to pay special attention to those stocks that appear in multiple screens. So, we talked a lot about Palantir. Palantir has been in the IBD 50, has been in the Big Cap 20, it's been in sector leaders. It's appeared in our curated lists like for IBD Live. Uh, we have it on leaderboard. It's been these kind of stocks have also shown up as good trades on Swing Trader, and so the more you see a small group of stocks that appear on these screens, the more likely you found a potential big winner.
Mm-hmm. Well, David, again, I always love having discussions with you. I mean, we get to have these talks all the time on Zoom and in the office when we're both in there at the same time. But really appreciate you going through all this because it's so fascinating. Again, the historical perspective. Um, Great having you
I,
on.
Hey, I couldn't have done it without you and all the charts and market history that you have under your belt. So thanks again, Justin, and want to wish everyone a great end of the year and hopefully an excellent 2026 of investing.
I think that's what we're all looking forward to. So appreciate it. Have a happy new year, everybody. That's going to wrap it up for us this time around. And let's just remember that we're going to be right back here on our normal time, Wednesdays next week. We're going to have Dr. Thomas Carr on the show, also known as Dr. Stocks. So it's going to be great to have him on again and start out the year with a bang. So hope everyone has a great, safe new year, and we'll see you all next time. Take care, everybody.